So this is M2 year on year. And this chart shows its correlation to the crypto markets overall. So this is the crypto market cap versus global money supply. And you can see the cycles are the same. Now that makes sense to me. It might coincide with the halving cycle, and that makes a supply issue plus a demand issue. Why a demand issue? Well, because global liquidity is what M2 is. So if there's more liquidity, there's more money that flows into crypto. As liquidity comes out of the system, there's less money. One of the other things that's been weighing on crypto has been inflation. It's a long duration asset, and long duration assets need to worry about the discount rate, and inflation is part of that, plus interest rates. Interest rates have risen, inflation has risen, risk assets get discounted more. So we've got to that, but I think you can understand by now, I think we're at the big turning point in the economy where inflation starts falling, but growth collapses. That brings down yields. And if it brings down yields, it starts allowing stuff further out in the duration curve, like 10-year bonds, 30-year bonds, technology stocks, and really crypto, because it's the most forward, longest term asset of all, to start outperforming. So I think we're starting to form a base based on the macro. Now, to bring it back to why the ISM matters, as you can see from the next chart, ISM actually leads money supply. So in this chart, ISM is inverted, and the money supply looks like it should start bottoming out and going higher. If it goes higher, crypto should go with it. Now that makes sense because as economic weakness comes, the central banks start coming into play, liquidity starts being pushed into the system. We're already seeing it in China. That's probably picking up the money supply growth already, but I think we'll see it globally. So that becomes interesting. You know, the US dollar situation, maybe we see swap lines, that helps money supply. So I think we're going to see the turn in money supply. So that's the macro for crypto improving as growth goes slower. It's kind of counterintuitive because you think, well, if growth's slow, then crypto is going to be bad. It's the opposite. As growth slows down, bond yields fall, inflation falls, money supply starts increasing, crypto starts doing well. So what this is a gyration within the long-term trend adoption of crypto. So this chart is the chart I always show, which is the log regression chart of Bitcoin. And what you can see is in the log regression chart, it got to roughly two standard deviations oversold, which is actually about the most oversold Bitcoin's ever been versus its trend. So we should be looking at a reversal point because the exponential trend of adoption is not going away. It's not changing. In fact, the adoption in this bear market has been much better than the previous bear markets where we saw a lot of people leave. We've not seen a lot of people leave. We've just seen network activity slow down because there's less money around because of money supply and inflation. So I'm looking for the turn here. The other long-term indicator I use is the 5-year exponential moving average. And this has encapsulated the trend of Bitcoin pretty much since the beginning. And here we are just touching that trend. We broke through it. I think we break back up through it. So again, this is the buy zone. You buy these times and this is where you make the larger returns. The risk reward gets better and better and better the closer to that 2 standard deviations oversold, the closer to this exponential moving average. That's when the really good risk reward. What's the downside? 30%. What's the upside? 10x. So those kind of risk rewards are super rare in almost any asset class, but they are in crypto and we're in that zone now. And I'm getting more and more comfortable with there. If, for example, I look at the RSI for Bitcoin, the RSI for Bitcoin is the most oversold it's ever been. So that would suggest that the markets are massively oversold. So again, the risk reward looks better and better here. It's actually the same for Ethereum. Ethereum, lowest RSI in history. Obviously, everything's starting to pick up as we've had this tremendous rally from the lows, which still looks small on the chart, but it's actually, some of these tokens are up 100%. I mean, ETH was up at the top of this run about 85%. I mean, that's pretty decent. But I think it's just the start. We're in the correction phase right now because we got overbought. But I think the correction doesn't last long before we go to the next leg higher as we start moving into the merge, which this piece is going to be mainly about when I get there. Another chart that shows us where we are is the Bitcoin rainbow price chart. I love this chart. It gives the logarithmic trend, but instead of the linear version, it gives you the log version. And it's a curve. And again, we're at the point where you want to be buying assets. It never gets through here. And if it does, it's for very short periods of time. That same rainbow works brilliantly for Ethereum too. And here we are, exactly in the buy zone where we should be finding any cash we can to put into crypto according to your risk tolerance. I mean, I've, again, still pretty much 100% allocated, and any income that I've got, spare income, I'm putting into crypto right now because I think the risk reward here is extraordinarily attractive. Now, a lot of people say, yeah, but it's got another leg lower to come. Well, if I look at the crypto fear and greed index, it got to 6. This is the lowest I've ever seen it get to. So basically, everybody's bearish. Everybody was expecting another sell-off down to 15,000, 10,000. Is it possible? Of course it's possible, but I don't think it's the highest probability. Could we have a new low? Yes. I still think that's probably maybe a 40% chance, 35% chance. I think the low is in, and anything from here is a retest of that low. But, I could be wrong. Anyway, it's still a zone. If you say 30% downside, 40% downside, 10x upside, that risk reward, I'll take it all day. Also, news flow. If you look at this article from The Guardian, this is typical of what you get to at this stage in the cycle. It's all a scam. It's all a Ponzi. See, we told you so. You see, because what they look at is the sell-off. It's down 85% or 80% or depending what token, 65%. But what they don't look at is that network log adoption. You see, the next chart shows you the most important thing is every low is significantly higher than the previous low. So yes, there are cycles, but this ain't oil where it goes up and down cyclically. It goes up and down cyclically in a secular exponential trend. This is about the most important thing I can express to you about the cryptocurrency markets. This is network adoption, Metcalfe's law. So when you get this cheap versus Metcalfe's law, this is the time you start to invest. This other chart has been around since 2014, and it was using, again, like that Bitcoin rainbow, using that kind of log curve to show you where it could go for network adoption models. And it's been following this really well. I mean, back in 2014, it was kind of predicting prices for 100,000 or for about 2020, 2021. Now, we didn't quite get there, but it's roughly in line with this trend, and it should keep going as the trend keeps accelerating. And I think it kind of makes sense to me because all we're doing is looking at a network grow. So I think a lot of this activity is getting very interesting. If I start looking at price, we've talked a bit about Bitcoin, but if I look at the chart of Ethereum versus Bitcoin, to me, it's very close to breaking out of this downward channel. And as you know, I've been overweight Ethereum for a long time now, and it's paid off very well. And I expect it to have another leg higher. So I'm more interested in Ethereum than Bitcoin. That's not from a philosophical standpoint. I think Bitcoin's bad. We're here to make money, and we're here to try and capitalize on the growth of digital assets and Web3. And Ethereum looks like it's a better bet. I think there's some tokens, many tokens will outperform Ethereum. I kind of think Solana might. I don't know. I might be right, might be wrong, but Ethereum, I'm very comfortable that it should do extremely well and should outperform, particularly with what's going on with the merge.